Oh, there are so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless. Oh, there are so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless.
So, you sell cupcakes at the office, or maybe you shoot wedding photos on the weekends. So many of us have that passion project, right? The thing that brings in a little extra cash. But, and this is a big but, when tax time rolls around, that fun little side hustle can suddenly feel really complicated. The big question is it just a hobby, or have you actually, maybe accidentally, started a business? And believe me, getting that answer wrong can be a pretty expensive mistake. So in this explainer, we're going to break it all down and decode the CRA's rules.
All right, so here's our game plan. We're going to tackle this step by step. First up, we'll get to the heart of the problem, this whole passion versus profit thing. Then, and this is super interesting, we'll look at how a huge court case basically rewrote the rulebook. After that, we'll dive into the actual test the CRA uses right now, apply it to some real-life situations, and then we'll get to the part everyone wants to know about, the tax consequences. What does it all mean for your wallet?
So let's talk about the passion to profit problem. It almost always starts with something you just love to do, Baking, photography, maybe woodworking. But then that magic moment happens. Someone offers to pay you for it. And boom, just like that, you're standing at this crossroads where personal enjoyment smacks right into commercial income. And that's the exact spot where this whole tax headache begins. Okay, so from the CRA's point of view, it all kicks off with one simple idea. What's your intent? Think of it this way. A hobby is all about the why. Are you doing it for the fun of it, for the pure joy and entertainment? If that's your main reason, if passion is in the driver's seat and profit is just a happy accident, then yeah, you're probably looking at a hobby. Now, a business, that's the flip side of the coin. It's all about that profit motive. It's when you're doing something with the clear goal of making money. But, and this is the really important part, you can't just say you want to make a profit. You need to have actual evidence that proves it. And get this, it doesn't even matter if you're making money yet. The intention and the proof are what count. Okay, so to really understand where we are today with these rules, we actually need to take a little trip back in time, because the way the CRA looks at this stuff now is totally different from how they used to. And it all changed because of a couple of massive Supreme Court cases that completely flipped the script. So back in the day, the CRA had this really tough test called the REOP test, reasonable expectation of profit. They'd look at your side gig and pretty much judge it on whether it looked like it could ever make money. It was a super high bar to clear. But then, in 2002, this huge case, Stewart v. Canada, came along and was a total game changer. The question isn't, can this make a profit anymore? Now it's all about the pursuit of profit. The real question is, are you behaving like a business owner? Are your actions pointing towards trying to make money? All right, so what does this new pursuit of profit idea actually look like when the CRA is looking at your file? Well, they've got this two-stage test they use now, and it all kicks off with one simple question. Step one is pretty easy. The CRA just asks, is there a personal element here? Is this something you enjoy doing? For pretty much every side hustle out there, the answer is yep. So that brings us right to step two, and this is the big one. They have to decide if what you're doing is being run in a sufficiently commercial way. That's the key phrase right there. So what does sufficiently commercial even mean? Well, it's all about backing up your words with actions. It's like building a case in court. You can't just tell the judge, or in this case, the CRA, that you intend to make a profit. You have to show them the evidence. Are you marketing yourself? Do you have a business plan, even a simple one? Have you invested real time and money into this? Every single one of these things is a piece of evidence that tells the CRA, hey, I'm serious about this. I'm really trying to make a profit. Okay, enough with the theory. Let's make this real. We're going to apply this test to a couple of classic scenarios you might even recognize. All right, scenario one, the photographer. This is a classic, right? They've got a 9-to-5 job during the week, but on weekends, they're out there taking these incredible wedding photos. It's a perfect example of turning a skill you're passionate about into some extra income. So, is this a business? Let's look at the proof. If our photographer has a website to attract clients, if they're sending out professional invoices, if they're taking the money they make and buying a better lens, that's huge. And a really big one, keeping their business money in a separate bank account. All of these things are crystal clear signals. They're not just messing around. Every checkmark here screams business, not hobby, to the CRA. Okay, let's switch gears. Scenario two.
the mechanic. Now this one's a little different. This person is passionate about vintage cars, sure, but they've also dropped thousands of dollars on high-end camera and computer gear. Why? Because they have a very specific goal, to create a best-selling coffee table book. This isn't just a passion, it's a passion with a price tag and a product.
This is such a perfect example of what it looks like to cross that line. You've got a huge cash investment plus a very clear commercial goal. That combo points straight to business. And here's a super important detail you need to know. The CRA doesn't wait for your first sale to say your business has started. Nope. They say it starts the moment you begin significant activities, things like actually producing the goods. So for our mechanic, the business clock started ticking the second they started putting that book together.
All right, so we've spent all this time figuring out where that line is between a hobby and a business. Now it's time to talk about why it matters so much. Let's get down to brass tacks, the tax consequences.
And this is really the heart of it right here. It's a massive trade-off. On the one hand, if it's a hobby, any cash you make is usually yours to keep tax-free. Awesome. The downside? You can't write off any of your costs, not a single dollar. But the second you're a business, everything flips. You now have to report every penny of income. The huge upside, though, is that you can now deduct your expenses against that income. And just a heads up, once your revenue hits 30 grand in a year, you've got to register for and collect GST/HST. That's a whole other level.
And trust me, these deductions are a huge deal. We're talking about everything from the flour for your cupcakes to the cost of your website. You can even claim a portion of your rent or mortgage interest if you have a home office. The gas you put in your car to meet a client, deductible. All of these things add up, and every single deduction lowers your taxable income. And lower taxable income means, you guessed it, a smaller tax bill. But, and this is a really big but, there's a serious warning here. You can't just play pretend. If it's pretty obvious you're running a business, and you decide to just call it a hobby so you don't have to report the income, well, the CRA does not like that. They can hit you with a gross negligence penalty. And that is a monster. It's a 50% penalty on top of the tax you already owe. It is, without a doubt, a very expensive mistake to make. Okay, so we've been through a lot. The old rules, the new rules, the examples, and it all brings us back to that one central question. But now, you've got the tools the CRA uses to figure out the answer. At the end of the day, it's on you. The burden of proof is yours. And this quote really hits the nail on the head. The absolute best way to make your case is to keep amazing records. A daily log of what you did, a spreadsheet of your income and expenses, a folder with all your receipts. That's not just bookkeeping, that is your evidence. That's what you show the CRA to prove you've crossed that line from pleasure to profit.
So, if there's one thing you take away from all this, let it be this. It is not about how much money you make. It is about how you make it. You can absolutely love what you do and still run it as a business. The CRA is totally fine with that. The only thing that matters is whether your actions, your behavior, show a clear and serious pursuit of profit. And that brings us to the final question. And this one's for you to answer. I want you to look at your own side hustle, your own passion project, through this new lens. Look at your actions, look at your records, look at your real intent. So what's the verdict? Is it a hobby, or is it time to call it what it really is, your business?